Hey YouTube squad, so I know it's been a while since I've done an upload on YouTube, had a little hiatus and break at the end of 2021, so welcome to 2022 where I'm trying to be more consistent with the YouTube channel and be more mindful of the value that we can drop through YouTube. My plan is to have a bit lengthier videos, not too long. I think in the past we've had a bit too long of videos, maybe like 60 minutes, but we're going to try and give a bit more value that we can give over on Instagram, for example, where I am active every single day. And yeah, I'm very, very excited for what's to come this year. So what I'm going to do today is I'm actually going to give a breakdown of a case study trade that I gave to the Vipers. It's a gold short. Now, potential for, one of those crazy risk to rewards as 1 to 100s that you always see. But here at the Vipers, we're very adamant about very realistic returns. So we don't shy away from explaining that we take majority of our volume off and position off at a more realistic return where we're talking 1 to 5 and 1 to 10, for example, around that range. It differs from trader to trader. Myself, 1 to 5 is like my like beauty spot, if you will, my area of confluence that I see on a repeatable basis. So we're going to jump on the chart. So we have the gold chart up here, and we're starting off on the weekly time frame. So one thing that you've seen from the videos, especially one of my more popular videos, that on structure, if you haven't seen that, I would definitely go recommend watching that now. But we like to have a top-down analysis, so using the higher time frames that holds more weight, that holds the momentum and direction of the market to base where the market's going to go. It doesn't have to be long-term in terms of months, but in the next, say, few weeks or even the coming days, for example. So taking a look at this chart, what we can see is we've had a lower high form, we've had a reaction, an impulse down. Now, even from this chart, we can already see that we've taken some wicks to the left, which in response to the daily, which we'll jump to now quickly, is taking a low, right? The last significant low where we impulsed from, we slowed down, reacted, impulse back down, breaking that structural low there. So we'll just mark that out. So at this point, we're looking longer term. The momentum and direction is to the downside. From there, what we had was a correctional pullback, right? And what we mean by that is a slow, comparing the two movements. On the way down, very aggressive, very impulsive, showing you that the bear, the sell traders are in control. And then on the way back up, taking much longer, very corrective in nature, very much slowly building liquidity to the downside for the eventual future down move. So just jumping back to the weekly again quickly, what we can see is we have a bearish POI, bearish point of interest in the market, right? Now we like to keep things as precise as possible, so we'll use the magnet tool here to make sure that the POI is highlighted correctly. And what we can see is the order block just disappeared, and that's probably because of this. Yeah, so just quickly do that again, and there we go back down to the daily there. So we have our weekly POI, so we're expecting some form of reaction from this area like we had previously, where orders may sit and be filled. As we go to the daily, we can see again price slowly coming to the upside. We have left very nice trendline liquidity on the way, which would then be looking to be targeted and to be taken out. And as you can see, over the last few days now, price has completed that and still has a lot more room to the downside to give. But price coming into that weekly, tapping it to a T, and then having a reaction. But how can we then base a trade from this? In real time, what would we be looking for? So if we just bring the bar replay back a bit, we'd be observing that correctional nature coming into that point of interest. That's where we then would jump to a lower time frame. So from the daily, we can see again prices impulsively come up, slowed down for a few days. So what do we know that happens on the 4 hour? We're going to see ranging sideways price action. And that's perfect, that's what we're looking for, because that's showing a buildup of liquidity, showing the change from, as you can see here, the buys, right? The aggressive buying nature of the market there going into the POI. And you can see that switch. The switch doesn't happen instantly. It needs to sort of fight and build liquidity on both sides, for one side to be taken out and then the other to be used for the drive down, which we can see here. What can we see here though? What did price do? It built up relative equals, trendline liquidity once again. It left equals to the high as well. We impulsively push into our POI deeper, and then we see a change in character on the lower time frames. And what do we mean by change in character? It's just literally a change in the price movements, right? Change in the, who's in control. Is it the buyers in control? Is it the sellers in control? So this is an indicator that shows the session highs and lows, called FXN, should you wish to use that. So in blue, we have the Asia session, in green, the London session, and in red, the New York session. So we'll leave it on the chart just for the time being, just so you see the price points that we're going to be looking at. Now, one very valid thing to take from this is what we're not trying to do is pick the top. We're not trying to choose where the reversal point is, right? There are people who try that and very much take many losses and usually end up missing the trade overall, and that's not something you want to do. So that's definitely a pro tip. We're not trying to take, choose and predict where the exact top is going to be of the market. We're going to let the market react, give us indications, confluences that fit our edge, our repeatable process, to then be able to objectively and confidently take a trade. So this is on the 1 hour here. We can see that price obviously ranged, price then impulsed to the upside, leaving this liquidity to the downside. We're already at a very extreme high, so we would expect some form of pullback at the very least, even on the 4 hour time frame, to make some form of higher low at the minimum, right? At the minimum, that's what we would be ideally looking for. As we go lower, so we'll go down to a 15-minute time frame now. What we can see is price had some sort of news pushing price up, came right all the way back down, came back up again, taking the high. So we took that New York session liquidity and then impulse down. Now notice the way that we came to the upside, quite slow, quite gradual, compared to when we had that reaction at that New York high. We've impulsed down, again indicating that the bears have taken control there. Impulsive, engulfing, one candle engulfing the previous, say, 10 almost candles there. Price then makes a lower high, comes down, lower low. Now we're in the Asian session. Fantastic. Now many people don't trade the Asian session because majority of people, from what I've seen, trade London or New York. So I normally am up for the end of Asia, for example. So roughly about 6 a.m., half 6, I'll be getting onto the charts. And normally we'll try and use that Asia liquidity and the high and low of Asia to then base trades from and use that as part of my repeatable process. I'm just going to bring the bar replay back just ever so slightly so we're not scrolling too often for the trades. We'll just bring it back to here. So first of all, we have this great trading opportunity just here, which, as you can see, is an impulse down, leaving equal lows at the low of Asia here. So we'll just mark that out. Okay, leaving lows at the low of Asia. We correctionally come back up, exactly what we explained before. Now this particular trade is a great example of no need to over refine, right? Many people, when trading smart money concepts, is that they will try and over refine constantly, getting stuck on the 1 minute time frame, for example, and usually end up being on the wrong side of the market because they're very much forgetting the higher time frame narrative that we spoke about, where the momentum and direction overall lies, the parent time frame, the one that holds more weight. And on the other side, they're normally getting stopped out because they're trying to get such small stop losses and chasing those high numbers and chasing those unrealistic returns that they end up missing out on trades. But in this case, this is a perfect example of why we don't need to do that. Here from the 5 minute, you get a great opportunity to take a sell trade. Now with this one, it's a bit more of an aggressive entry because at the end of the day, we haven't had a lower time frame break of structure, and therefore it's not the most ideal. But fitting towards the plan of the structure that's in the market, the correctional nature of the market, having your order block, having your entry criteria, and targeting the equal lows in Asia low. As a London scalp, for example, that is a perfect example of what you would be looking for, right? You'd be looking to get in, get out, 1 to 5, for example. And with this, as a perfect example, it's almost textbook Viper trade, is hitting your target without even having to take liquidity, without even having to break the overall structure. As you can see here, we're taking our profits before we even take out the low. So that is one example. But the main example we wanted to go over was a great confirmation-based entry, which would have been the almost a high point of the week that you'll be capturing. So we'll just move on to that now. Here we can see the 15-minute candle, right? 15-minute candle just here. We'll mark this to the left. Oh, there we go. Again, we just want to be accurate, so we'll use that magnet tool to make sure that we've got it precisely on there. Now, here we have our 15-minute candle. We've already broken structure to the downside, creating new structure, lower low, lower high. Now, here's a very interesting move. We see a lower high form and a new lower low form, right? I'm just going to move this off the... Here we go. So that's the weekly POI just out of the way there. Now you can see London left, liquidity to the high. Let's drop down a time frame now, and we're going to go down to the 5-minute first quickly, and we can see that the London high is very much in place, sitting literally borderline on the bottom of that order block, on the bottom of that POI. And POI, by the way, just means and stands for point of interest. Now we have trendline liquidity as well in play, sitting just below once again, and then we have our correctional pullback into our order block, and then a reaction, right? Let's break it down. As we go down lower then, to our 1 minute now. So we've seen a reaction. We've seen our POI, we've seen the structure, we've seen the higher time frame POI have a reaction. The overall structure on the 4-hour and daily has then broken the lows. So we're looking for shorts at this point. So it's not like we've just gone straight to the 1 minute, and that is the mistake of many traders. We've built up a story, we've built up the narrative to get to this point. Now at this point, what we can see is price impulses down, leaving equal lows. Perfect, right? Absolutely perfect and textbook move. From there, we see a 1 minute POI, a 1 minute order block that we can then base a very justified trade from. All right, here we go. As you can see, impulse, right back, slow down just below the order block, which is perfect because we're getting that that extra confirmation. Entry just below the order block to account for spreads, so you're not getting missed on a trade. I see a lot of people do that as well, where they'll just be trying to, again, be too intricate and be missed out just due to spreads, and then normally they'll end up chasing the market because they've missed the trade opportunity. Now again, leaving breathing room above the order block as well for the exact same reason, so you're not getting stopped out of the trade. And now you have a very confirmation based trade. We've used higher time frame narrative. 1 to 5, for example, in this case would be hit just here, just taking those equals basically, and before you even get to the overall structure here on the 5 minute, before you even reach those lows, and that would be a fantastic trade. 5%, right, in a very relatively quick space of time, 5 minutes almost. Fantastic. Now, how could this trade turn into a 1 to 100 trade, for example? So the most important thing to remember is those large trades that are possible, so not that they're not possible, very much possible, is the difference is that they come from a higher time frame point of interest, a higher time frame point of view. So it's basically trying to get a scalp entry with a swing target. So remember what we said, the swing target can very easily be the 4-hour low down here. So we take that target, we bring it all the way down. Now it brings us to 1 to 60 or just below, right? Fantastic. Already, much larger target. And then when it comes to the daily, we can also see a POI down here. And bearing in mind that that POI can bring us to 1 to 100 quite easily, but yet there's still more room for the downside. So for potentially, we could be looking at the low to be taken, because that's what the overall position is, and position of the higher time frames is telling us. So giving us 1 to 50 plus, for example, and 1 to 150, should I say. So that's great and all, but as I said, we at the Vipers are adamant on a realistic, consistent return. Meaning, so we'll get rid of the bar replay here. At 1 to 5, according to my rules, I would take off about 80% of the volume, meaning I've banked 4% for the trade. So meaning that if price was to go against, because at the end of the day, we're in a game of probabilities, regardless of the structure, regardless of all the confluences we use, the market can do anything at once. At any moment, something could, especially being a safe haven, something could happen in the world causing gold to fly. Someone could make some form of comment, for example, and gold could just fly to the upside. So therefore, that's why it's so important to pay the trader consistently. So at this point, let's say, for example, we take an 80% off and we're holding just 0.2% of that trade left. In this case, that is an additional 20% just from holding such a small partial. And isn't that fantastic? 20% in the space of 2-3 days, right? 2-3 days, an extra 20%, right? So then therefore for the week on one trade alone, that's 24%. Majority of the volume taken off at 1 to 5. And then that small amount of partial paying you 20. And you could be done, you know, if you're trading a 6-figure account, for example, that could be you done for the month, could be you done for even 2 months. Remember what it's all about: being consistent, being realistic, and understanding that once you've taken from the market, you are in that top 1%. What then keeps you in that 1% is making sure that you secure those profits, hold those profits, and we don't chase the market. So as this thumbnail on the video will say, 1 to 100 plus, I cannot stress enough how taking realistic returns, having fixed take profit schedule for each and every single trade is powerful. And don't allow that greed to take over as easily as it can be with the social media game that we're in now, where we're seeing such huge risk to rewards promoted. Realistic returns. Yeah, the way I like to say it is the Viper returns. But yeah, hopefully you enjoyed this video. Hopefully you were able to see the narrative of higher time frames broken down into lower time frames, how you would go about the mindset of taking such a trade, and understanding why you would hold so long. Now this is how we trade every single day. This is a case study, as I said, given to the Vipers, and therefore should you wish to take a look at what we do, by all means check our socials, check all our videos out, check everything out. You know, at the end of the day, we put out so much content to try and help as many people as possible, and it would be great to have you subscribe and follow on for more future videos. And obviously go check out Instagram because I'm very active over there. It's at riz.viper. And otherwise, hope you had a good one, and catch you on the next one, YouTube squad.